Welcome back to Switzer. With the RBA Governor upgrading the bank's forecast for the economy from 2.8 to 3% and the dollar heading up, does this change the intrinsic value calculations of that wonderful guy, Roger Montgomery, and the attractiveness of companies that he's watching? Or the opposite? Roger joins me in the studio right now. How are you, mate?
I'm well. Good to see you again, Peter.
So Steve's been nice to you. I'm not always rotten to you, am I?
I was really pleased with that introduction.
Yeah, I missed you.
Thanks very much.
Our guy Buckland's been coming
David Buckland, well, from Buckland Asset Management. I think that's
right.
what you said.
That's exactly right.
David, yeah, I'm absolutely delighted to have David as CEO because for various reasons, if I'm interstate, he can fill in for me, and I feel he does a good job.
He does. Now, one of the things you guys a few months ago were tipping Kathmandu, and it had a really nice report.
Well, in fact, we bought it in May last year, just over $2.
Did it worry you for a while, or it kept going well?
No, I think it went up initially, and then it came back a bit, and now it's up. I think it's $3.
Yeah, it's a nice report.
Like that. Yeah, so your question was, and I've got a picture which will show you why we bought it, but the question that you asked me at the time was, well, why did you buy it? You know, what did you see in it?
Yeah.
So a couple of things. What we saw was initially was really high margins, really high gross margins, so 64% gross margins, which is fantastic. Now, when you've got a business that has really strong margins, there's a lot of operating leverage, so you don't need a big increase in sales to get a very big increase in profit line.
Yep.
What we then knew was that Kathmandu is positioning themselves. Everyone in Australia gets focused on something that's old, right? It's hard to get people to move on. And what they were thinking about was Kathmandu just sells stuff on sale, and in the interim, nobody really goes and buys stuff. Well, what they don't realise is the biggest and most valuable asset in Kathmandu is their Summit Club. So when they IPO'd, that had about 350,000 members or thereabouts. They've now got 4 times as many members. They've even got about 13 or 14,000 members that aren't from Australia, New Zealand or the US, and they've done no promotion to get them. But you get incentives. If you join the club, it's cheaper to buy the stuff, and so you join the club, and then they can market to you because they've got the information. Now, here's the interesting thing. It works really well with baby boomers. And baby boomers are now starting to travel more, and you've seen a proliferation of adventure travel agents and adventure tour companies and those sorts of things. They've got a fantastic little saying. If our gear is good enough to get you to the top of a mountain, it's good enough to walk the dog. And then what happened... And
people are buying that sort of stuff to walk the dog.
Now, what happened was we had a little email from one of our brokers whose son works in one of the Kathmandu stores in New Zealand. And he said, oh, by the way, it was not a particularly special day. It wasn't an auspicious day the other day. This is back in June last year. And he said, but it was a Sunday, it was 1:30, and it seemed to be busier than normal. And so they sent a photograph. Now, I'll put this on camera too. So if you have a look at that, it is absolutely jam-packed with people. They are winding their way around the clothing to get to pay. And this is at 12:30 on a Sunday. And then what I noticed about this photo was baby boomer, baby boomer, baby boomer, baby boomer, baby boomer. But they're all baby boomers waiting in this queue to buy their stuff. That's a huge market, getting bigger by the day, more people retiring. So that was the thesis. Then when we looked at the numbers, they looked really good. We valued it about $3.50. That was back when it was just over $2. It's now about $3.50, so we think it's about fair value.
Did it have, in its background, did it have a bad patch, Kathmandu?
I think all retailers, though, yes, the answer is yes, but all retailers go through bad patches. The point is this particular company is finding out that their small format stores are actually working really well. So instead of having, say, 170 stores, they can have 180 stores or 185 stores because these smaller format stores are getting a really good revenue per square metre.
Okay. Now, apparently we've only got 3 minutes. So.
Oh, gee, well, we better hurry up. You wanted to know what else I like?
Yes, what else you like?
Now, I have to confess, we own these, right? By definition, we like what we own. So the ones we like the best, Seek, CSL, Woolworths, JB Hi-Fi and Challenger. So you go out and research those. You then wanted to know about economic growth and what that means.
Does it affect your calculation?
It has no impact on the stock market, by the way. It doesn't matter if the economy is going stronger than average or less than average. It makes absolutely no difference at all. Half the time the stock market will go up a lot, half the time it'll go down. It doesn't make any difference at all.
Okay, we'll argue it on another night, but go on.
I'll show you the stats next time when we've got more time. Higher Australian dollar, yes, it does change our view, but but it's temporary.
Okay.
The Australian dollar is going lower. Thermal coal,
I think so too.
metallurgical coal, iron ore, all going down. In the long run, the Aussie dollar follows the resource cycle, and that's over.
Yeah, and tapering in America, greenback will go up. Okay,
Correct.
Finally, Hills, because this business we watched that last night, Lively, Hills have bought the rights to do it here.
Yeah.
What do you think of Hills, quickly?
Okay, very quickly. B3 means it's investment grade.
Okay.
Its intrinsic value, though, if you go back over the last 10 years, sadly for it, it's actually gone down over the last 10 years.
Yeah.
It's actually declined, and so has the share price. So many years ago, the share price was up over $7, or and this is in 2007, and now we're talking about $1.73.
Yeah.
It's expensive.
Even $1.73.
Even $1.73.
Looking at its profits and whatever.
It's expensive compared to intrinsic value.
Yeah.
The things that are good for it, net debt to equity has been decreasing, long-term cash flow has been really good, exceptional EPS growth. Analyst forecasts, though, is pretty... The range of forecasts is pretty narrow. Yeah. They're all going to be all right, or they're all going to be wrong. The only thing that we haven't liked is over the last 5 years, earnings per share growth has been not so strong. No. And so we want to see evidence of a turnaround. This new product that you talked about yesterday
have a look at
on
that.
The show, that could be something exciting, but whether it touches the sides of a bigger company, I don't know.
We don't know. All right, mate. Fantastic. Always great to have you on the program.
Thanks, Peter.
The reason why I got short of time, my usual producer's away, family illness issue.
I'm sorry to hear that.
And I didn't, the new producer, I didn't go through and do the timings like I usually do. I always like giving you a lot more than you got tonight.
I'll be back in a fortnight, and we'll argue about the economy and its relevance to the stock market.
That'd be perfect. That'd be perfect, Roger. Thanks for joining us.
Pleasure.
If you want to read my thoughts each morning at the close of Wall Street, check out my website, switzer.com.au. And if you have any questions around super, have a look at the switzersuperreport.com.au, where Roger contributes brilliantly.